I just got paid, so where the hell did all my money go? If you're an NRI, you know this frustration. In the last 13 years, I've seen this happening countless times. Your salary hits your account, you feel rich for exactly 5 minutes. Then reality kicks in. You have to pay rent abroad, send money back home, cover hidden expenses, and lastly, save if you can. Here's what nobody tells you. Without a system, you'll keep living paycheck to paycheck no matter how much you earn. I've seen people making 6 figures and still scrambling for money by the end of the month. But there's a solution. In the next 10 minutes, I'll walk you through my NRI Payday Routine that will only take 30 minutes of your payday to automate your finances, including expenses, savings, investments across 2 different countries. This will not only help you follow a system, but will also let you enjoy spending on the things you love, knowing your priorities are already handled. So watch this video till the end so that you finally know what to do with your money. Welcome to NRI Shala. I'm Malvika, and this is where we navigate NRI life together, from visa guidance and investments to maintaining your roots while building your future abroad. Before we move ahead, if you are thinking about retirement planning as an NRI, we have something special coming up. We're hosting a free exclusive webinar on September 27th on building retirement corpus and planning retirement in India with cross-border tax implications, featuring Keerthana from Keerthi's Finfo as our expert guest. Since we can only accommodate a certain number of participants to ensure quality interaction, we recommend registering early. You'll find the registration link in the description below. Now let's dive into your NRI Payday Routine. The first thing to do is to calculate what I call my 2-country baseline. Here's what happens to most of us. We fall prey to what researchers call the illusion of wealth. Your $4,000 paycheck drops into your account and suddenly you feel rich. But that feeling is dangerous because your brain is doing mental accounting, categorizing that lump sum as available money, instead of remembering you've got bills to pay in 2 countries. This single habit has saved me from the financial trap that catches so many NRIs. Without tracking these split obligations, it's shockingly easy to overestimate what you can actually afford. And before you know it, you're stressed about money 2 weeks before your next payday, wondering where it all went. So here's how to combat this. Your 2-country baseline is your core survival number: rent or mortgage, utilities, groceries, and insurance where you live, plus every single rupee commitment back home: parent support, loan EMIs, property maintenance, all of it. Strip away the luxuries and fun spending. Just calculate what keeps both your lives running. The magic happens when you put it in a spreadsheet. One column for local expenses, another for Indian rupee commitments. Update it with actual spending each payday. This creates a paper trail that's crucial if you ever need to justify remittances as family maintenance. I aim to keep this baseline around 50 to 60% of my take-home pay. Why? Because hitting that target means you're freeing up the remaining 40% to actually shape your life instead of just surviving it. That's where your savings, investments, and yes, some guilt-free fun money comes from. But here's how most people think about money. I should really try to save more. Nope. You don't try to save money the same way you don't try to brush your teeth when you wake up. You just make it happen automatically. So here's how to do it. The moment your salary hits, pay yourself by automatically splitting chunks to specific goals. Each dollar has a job. You can set your bank to immediately transfer a certain percentage to emergency savings, investments, and a fixed amount to your India account for your family. These happen automatically, a day or 2 after payday, like clockwork. Savings and India obligations become non-negotiable bills that get paid first. Whatever's left in checking is truly disposable because essentials are already funded. Save confirmation emails for these auto transfers in a cloud folder. Over time, this builds an audit trail showing you consistently moved money to savings and India every month, That is useful if banks or tax authorities ever question transfer patterns. But this won't work unless you have an emergency fund. Imagine one day you wake up to an unexpected expense. Maybe you need to send last-minute expense to family, or need to fly home suddenly, or your job suddenly starts to feel a lot less secure. How will you handle that? The reality is, many of us are just one financial surprise away from stress, debt, or a difficult choice. So before getting ambitious with investing or big remittances, ensure you have at least 3 to 6 months of baseline expenses as a quick safety net. If you are building this fund, direct a part of your paycheck to a separate savings account until it hits that target. This amount of cash buys you time to react without financial panic in 2 countries. So shouldn't you just focus on building a 3 months or a 6 month buffer first? Actually, no. Not unless you have high-interest debt to pay off. High-interest debt drains your money faster than any savings account can grow it. Anything above 8% interest is costing you more than you're earning elsewhere. So once your 1 month buffer is created, add a small chunk to a 3 month buffer, but focus heavily to kill off your debt first. Now there are 2 ways to go about it. The first is a snowball method. This method is all about paying off debt in order from the smallest loan size to the largest. It feels rewarding quickly and psychologically motivating. But if you choose the avalanche method, you'd spend less interest in the long run. Prioritize paying off any high-interest debt, credit cards, personal loans, or student loans above 7 to 8% interest first, and then move on to the lesser interest debt. Keep loan statements after each payment. This builds proof you're reducing debt and might be needed if you close accounts or claim interest deductions. The next step is to maximize free money. If your employer offers retirement contributions or matches, contribute enough to get the full match. In the US, that's your 401k match. In the UK, workplace pensions. In UAE, focus on end-of-service gratuity planning. An employer match is literally free money, 100% return plus tax advantages. Even beyond matches, contributing to retirement accounts can lower your taxable income now or grow tax-free. Your future self will thank you for grabbing all these boosts early in life. Keep payslips and annual retirement statements. These prove contributions went to legitimate retirement funds, useful under tax treaties if you move countries. With basics covered and debt handled, grow your true emergency fund to 3 to 6 months of essential expenses. Automate part of your paycheck into high-interest savings or liquid investments. Decide where to keep this based on your situation. If you might return to India, put some in NRI fixed deposits, since interest is tax-free in India and fully repatriable. Otherwise, keep it locally where you live. For NRIs, this provides flexibility across borders. Funds ready in India for family needs, or locally for job hunting without rushing home out of desperation. Now, since you're sending money to India regularly, the next step is to make it a routine. Transfer on a fixed schedule a few days after payday to sync with your budget cycle. Always send to your NRI account to keep money repatriable and tax-free in India. Use trusted, low-cost services like Aspora instead of expensive bank wires. Set up recurring transfers to benefit from Google rates and lower fees. Unless it's a large one-time transfer, don't stress over daily exchange rate fluctuations for regular transfers. Regular timing gives you dollar cost averaging. That means it smoothens out volatility over time. But document everything. Note the RBI purpose code P1301 for family maintenance, P1302 for gifts. Save transfer receipts. This creates proof that specific amounts went for family support, and this is critical if authorities question transfers. After safety nets and obligations, allocate payday portions to long-term investments, both abroad and in India. In the US, contribute to Roth IRA or brokerage accounts with index funds. In the UK, top up your stocks and shares ISA. In UAE, use international brokerages for diversified ETFs. But be mindful of cross-border tax implications. If you are a US citizen or a green card holder, avoid Indian mutual funds due to PFIC tax complications that can create hefty penalties. Instead, stick to Indian stocks via NRO DMAT or US listed India ETFs. However, if you're in the US on a work visa and not a US tax resident, you may have more flexibility with Indian mutual funds. But always consult a cross-border tax advisor to understand your specific situation. Invest every month automatically rather than trying to time markets. This builds wealth consistently and exploits compounding. Keep a spreadsheet of monthly contributions and annual statements from all accounts. This is crucial for tax filings and reporting foreign assets. Finally, after handling saving, investing, and obligations, you can fund your guilt-free spending. Real financial freedom means your payments happen without you thinking about them. So you can say yes to family plans and coffee dates without that nagging, should I be spending this feeling? So allocate 10 to 20% of take home for pure enjoyment. Dining out, travel, family treats, occasional splurges. Now you won't feel guilty buying that phone or flying business class because it's within your planned limit. The money was designed to be enjoyed. These NRI payday routines provide systems to your financial spending and helps you focus on building the life you want. The key is automation. But remember, this routine adapts as your life changes. Review it twice a year or after major changes, raises, job switches, or country moves. If you are sending money to India, make sure to watch this video. But before that, let me know in the comments below. What step will you implement first? And if this helped you, subscribe for more NRI financial guidance. Until next time, this is NRI Shala, where we navigate NRI life together.